The top 5 stocks that we're watching this week. That Fat Man Zoom was so emphatically excited about getting to right out of the gates is what we're going to get to right now. And for me, we don't have a whole lot of earnings plays left. Earnings season is officially over. There's a couple of them that are going to be sporadic here and there. One of them in particular that I like is Dick's Sporting Goods. They absolutely smashed earnings last time around. Expected earnings per share for them was last quarter was actually only about $1.29. They came in at $3.21 last time around. Now, I don't expect them to blow earnings out of the water that much this time around, but I do expect them to beat pretty handily, specifically because we've seen retail make such a huge comeback. And Dick's, yes, they are in retail, but they have catered to a lot of the outdoor living crowd. And we talked about how camping and RVs and stuff like that were absolutely phenomenal as far as sales were concerned. And Dick's definitely benefited from that as well. But Dick's also benefits from the retail side of things. We saw Under Armour see a huge uptick in sales, and we saw Nike also, which Dick's sells their products. Here's the other thing, Fat Man Zoom. I don't know if you've really thought about this, but you may have. We've seen a lot more people, and especially in the area that you live in and being in hospitality, businesses trying to take efforts to have more comfortable outdoor areas, especially when it comes to just being in the service sector. If you want to hang outside or what have you, Solo Stove, they are a company that provides it's like an outdoor, I don't know what you want to call it, outdoor fireplace, and it's like an outdoor bonfire thing. It's interesting. It's like a stainless steel or whatever. You see these all over the place in breweries, wineries, and even outdoor bars and that sort of thing. And it is interesting to see how much in demand this actually is. Dick's has sold out of them. They are on back order till December 21st as the farthest. So we're seeing a lot of these outdoor products still being high in demand because of the Rona. And I think that we're going to see accelerated growth with Dick's. My estimated earnings per share at $1.43 compared to 98 cents is what the estimates are concerned. And I think that Dick's is going to be something that we see make a huge move going into the end of the year.
Oh, you're going conservative, bro.
I mean, it's 50%.
I got $2.69. Steve
right.
King, what you got to say? Because I can't see, this is definitely a bold prediction, but I don't see why they wouldn't perform better this month as well. Yeah. And kind of to your point, I didn't think about that, but yeah, those Solo Stoves, with a lot of these rollbacks, you're going to see people having to buy more of this stuff.
Yeah.
So demand's going to remain high over the next few months. And that bodes really well for them. Here in Maryland, we're back to 25% indoor capacity, and we got a lot of tents set up, things set up. So this bodes well for most states, especially the states that are high COVID cases, which tend to be urban areas, urban centers. So I agree with you. Now, here's another thing to think about, and I was trying to pull it. I couldn't find the article, but I've known I've seen the article. Nike, you mentioned Under Armour. Nike had cut a part of their e-commerce growth strategy last quarter. Actually, they've been doing it for over a year, but last quarter they ended their partnership with a lot of their big retailers.
Yeah.
And one of them, Dick's, stayed. I believe Dick's was one of them that stayed. So this also bodes well because not as many retailers are going to have Nike as before. So you either go direct to consumer, directly to Nike, or Dick's, I would imagine, could see some increase as well in traffic for Nike products. So I think that bodes well for Dick's. I feel really good about these earnings. I think they're going to do really well.
Yeah, one thing to just kind of one additional thing that I'll say, if you guys aren't sold on the kind of demand that we're still seeing from outdoor living products, the CEO from Solo Stove said they were seeing 100% year-over-year growth, but when the pandemic hit, they saw an immediate acceleration of growth and said that they've seen upwards of over 300% this year since the pandemic hit. And I think that we're going to continue to see accelerated growth. The fact that they're having trouble just keeping up. I'm not just talking about these stoves specifically, but just outdoor living in general. And this is where Dick's really kind of shines. REI, all those other ones as well. We like this a lot. If you're looking at the chart here, $60 I think is where we start to see this move up, and it probably makes a huge move on this thing. They have earnings again Tuesday pre-market, estimated earnings per share $1.98. And we think that they beat pretty handily. So look for that $60 mark. If we break up over that, we should start to make moves towards those all-time highs. I think if they blow earnings out of the water like they did last quarter, we should see all-time highs out of Dick's pretty handily.
Absolutely. Next one we got number 2, John Deere. All right. John Deere, ticker symbol DE, earnings Wednesday Wednesday pre-market, November 25th. Their estimated earnings per share are $1.39. And I have them coming in at 228, Brad. Here's the thing, kind of like home improvement. It's the same deal. People are at home doing home projects, working on their yard, landscaping. I think this is a great opportunity for John Deere. And by all accounts, what they're saying is demand's really high for their products. So I think that homeowners that want new products, and then people who have maybe had something out in their shed and it's time to rotate and get upgrade, right? Because they're using it more. So demand's really high. If you compare, if they beat year over year, this is going to be epic, bro. So if we look at the earnings, so oh shoot, hold on, sorry, I did the wrong one. So Deer Park's earnings, Deer Park, it's John Deere. Sorry, Deer Park. Deer Park water, also drink your Deer Park water. John Deere, I would say they blew out earnings last quarter. Yeah. Estimated was $1.26. They did $2.57. Now, if we look last year and we compare the two quarters, so they came in at 271 last year, so 257 quarter for quarter last quarter, all right, compared to last year. Right. So they did a little bit less. But they typically do better the following quarter. So the November quarter, they typically do better than the August quarter. So if they can do $2, which they typically, I'm sorry, they didn't, let me get that correctly. So they do slightly less, but if they can do $2, which they did $2.14, that'll be 3 quarters in a row with $2 a share, which is really bullish for this company. So, I feel really good about John Deere. I think they come in at 228, and that means they beat quarter over quarter last year. I think this thing's gonna make a really nice move. I think this is a sleeper stock, and if you look at the daily chart, it's a nice trending chart over time. So may not be Zoom type blow it out of the water, but I think it's going to be a nice steady winner, and I think we could see a nice move up towards the end of the year. Well, I mean, hey, since the end of October, it's moved about 25-30% just about. So it's definitely continued to make nice steady moves, and really not that many red days to speak of. And when there are red days, it's not like it's a huge drop off and anything to really worry about. It's funny that you mentioned 214. I had earnings per share coming at 213. And so I think that you're absolutely right about everything. The one thing that I would add to this is we've seen an increase in car sales, right? And what's the reason for that? Why have we seen an increase in car sales? One of them is because, people aren't too keen on taking mass transit anymore. You know what the other one is? What's that? People are moving out of the cities and they're moving in the suburbs. Oh, yeah, that's a good point. So you're moving in the suburbs. Not only do you need a car, but you need to mow your grass now. You have a lawn. So I think that we're going to see a huge increase in sales as far as John Deere products are concerned. Also, not only are you going to need to mow your lawn, but you're also going to need a snowblower to blow out your driveway as well. So there's definitely a lot of catalysts that are moving in a great direction for John Deere. I think that they do crush earnings as well. And it's going to be interesting. I mean, these are stuff that we don't really talk about a whole lot, but these are sneaky little stocks, bro, between like Dick's and John Deere, stuff like that.
you probably won't see these talked about on too many other channels, but they're definitely ones that you guys need to keep your eyes on for those reasons.
Yep.
So next for me, not related to earnings, but it's Amazon. And I put Amazon on the list, but I really wanted to just say all of e-commerce. We saw a huge move out of Shopify on Friday. We saw some huge moves out of Etsy as well. Amazon has lagged behind that move a little bit, which is why I wanted to kind of bring Amazon to the forefront, but it's really all of e-commerce at this point. And looking at Amazon, we've always said that 3,100 was a really solid support for it, and it still remains that solid support for Amazon right now. I think that they will have a banner quarter this quarter because of the increase in cases and some of the lockdowns and people worried or thinking about maybe not even having a Christmas in person, but maybe doing it virtually and then sending their loved ones gifts via Amazon or Etsy or Shopify or what have you. So I think that Amazon's going to, it's only a matter of time. This feels like it's a ticking time bomb to the upside. And I think that we have a really strong melt up with Amazon. I know that we are about a month and a week out from the new year. I said 4,000 was going to be my estimate as to where Amazon could get to. I still think it's possible.
Your guns.
I still think it's possible. And
right.
you know, I'm not going to deviate from this. So, 4,000 is still my target for Amazon. Maybe we get close, maybe we don't, but I just don't see a scenario in which this stays down here at these levels for too much longer. And if you've been waiting for your opportune time, I don't know if you're going to have a whole lot more time to wait for Amazon to come down below 3,000.
So Brad, I did some digging and I have a really interesting piece of information for you all. So I'm going to quiz you. I'm putting you on the spot.
Okay.
Amazon went public in 1997.
Yes.
All right. And I went through all of the earnings and I looked at the January quarter. So they reported earnings in October. So the next earnings are going to be in January. So first quarter of the following year. I want you to just guess. So you have 1997 to 2000.
Yeah.
2020. I looked at January and I looked at the previous quarter. Can you tell me when the last time the previous quarter, January did not beat the previous quarter? Take a wild guess. What year?
So ask that again, because I was a little bit.
So we just had earnings. So next
Right.
January, the question is, are they going to beat or not? So I'm thinking, are they going to beat? So I look back and can you tell me the last time when January did not exceed the earnings per share of the previous quarter?
Oh gosh. I mean, it probably would have had to been in the 90s. Cause I mean, that's the only time that I was thinking of, like when their main focus was kind of books before they they started to expand on everything else. That would probably be my guess.
So 2001,
Close.
2001, 19 years ago. And they actually, they didn't do worse. They just did the same number. They reported the same earnings. So that means for essentially 19 years, quarter one of the year was better than the previous quarter. Last quarter was a record-setting quarter.
Yeah.
The quarter before that was a record-setting quarter in history, right?
Yeah.
So this year should be a record-setting quarter. And if they pull out that number, I mean, $13, $14 a share, it's going to be insane. So the move's going to happen before that. And that's the reason why I'm saying it. We're far from earnings the end of January, but we got to think about that because what we've been saying is holiday season's ramping up. Amazon is so easy to use. I don't care about online pharmacy. Yeah, that's nice. That's great. But everything else they're doing is enough for anybody to be bullish on this company. They have huge opportunity with Whole Foods market share, and the ease of use doesn't matter if you hate Amazon or not, or big business. They make it easier than any other company. It's not even close.
Yep.
You can even return products to Whole Food now. Literally, you just bring in your product and you just put it in the locker. You go right to the desk and they'll take care of it for you. So anyways, if they just had a record-setting quarter and they always beat the following quarter, I mean, we're getting another record-setting quarter. So I agree with you on that 4,000. Might not come right at the end of the year, but if it doesn't, it's going to be really close to that earnings.
I think so too, man. I don't see a scenario in which Amazon doesn't have some crazy move. There's a reason they call it the Santa Claus rally. Amazon is a huge part of that, and there's no reason to believe that it isn't a part of it this time around either.
Yeah, absolutely. What are we looking at the chart?
So as far as Amazon's chart's concerned, like we talked about, like I was saying in the beginning of this topic, was 3,100 really seemed like it was a really good area for support. That's right where it closed at on Friday. Didn't really have much movement. Now, to our point that we were talking about earlier during the show was that, it might be a little bit of a slow week. It might be. There's a pretty good chance. So this might give you an opportunity to kind of work your way into Amazon in this low $3,000 range. And really, at this point, I don't really have a pinpoint price targets as far as where I think there would be a good opportunity to get in. Just get in this low $3,000 range. Don't give yourself a specific number. I think just dollar cost average, you're averaging your way in here just makes all the sense in the world.
Yeah, I see. For us, 3,200, under 3,200 has been a buy.
Yeah.
Under 3,000 is a strong buy. It's kind of a no-brainer.
Yeah.
It's trying to stay above that 3,200, and hopefully, 3,500 should be a thing of the past when it makes that move. So that's kind of what I'm looking for. But it should be exciting for Amazon. This is going to move.
Yeah.
I'm just ready for it. Anyways,
Me too.
Speaking of big movers, number 4 is Zoom. So Zoom has earnings, not this week, but the following Monday. And I wanted to put it on for this Stock Watch Sunday because next week's going to be too late. So let's first talk about any potential dips. If there's any news, I think we kind of know the story about a temporary dip. That's a buy opportunity in my opinion.
Yep.
But right now, I know people were antsy about the move it made. It made a great move last week. Here's the thing, but it made a move off of a 20% downturn. So it hasn't even made up those losses.
Yep.
In a way, I think this is a great opportunity going into earnings. And if you see a dip this week, get in on it. Or I would get in on it. But here's what I'll say. 76, they report Monday after hours on November 30th, 76 cents a share. I'm saying $1.33, and I think that's conservative.
Ooh.
$1.33 a share. Let's rewind back to the last earnings.
Yeah.
Massive growth, 300% growth. You're going to see that growth again.
Mm-hmm.
To me, when Zoom's going to slow down or when it's going to adjust or correct is next year, like later next year when it can't match the year-over-year growth. So we've got probably about 6 months more of bullish patterns in Zoom. So expect more massive growth. And when you think about their guidance that they gave from last quarter for this earnings coming up, they thought we'd be further along. And so they built it in, not anticipating the rollback. And so to me, I think that they're grossly underestimating and they were really conservative. So I think they blow it out of the water. I think we see more massive growth. We've said this before. So look for international exposure. I think you see more and more international exposure. Healthcare, education. These are underserved and Zoom is putting a huge focus on it. Education, they're not even going to monetize until this thing is over. So that's a whole nother boom that they have. And they're only scratching the surface on healthcare. Zoom has huge potential. I know it's made like nearly a 500% move this year. I don't care. It's basically had growth of like 5 years over the course of this whole lockdown. So I think it makes sense, the growth that it's shown. I'm still really bullish on it. And I think that it does not belong below $500 today.
Yeah, I mean, so for Zoom, it's one of these things where you look for potential dips on vaccine news. Investors, particularly in the retail space, have this in their brain that, the second we have positive vaccine news and it starts to get distributed, that Zoom becomes no longer relevant. And I think that is just one of the biggest mistakes that you could make with Zoom, to a lot of the points that you brought up. The thing of it is that I've used a lot of references about cats, but I'm going to use this one. You can't put toothpaste back in the tube once you got it out. So with remote work, it's the same thing. Remote work is here to stay. And I think to a certain extent, we're going to see accelerated growth in remote learning as well, especially in the college side of things and in primary school as well. But I'm thinking that we see a lot more of this in the college space too. And with Zoom, you bring up some really good points as far as, the potential growth and that they're not even monetizing it with schools and that sort of thing. But my thing is that the product itself is so much more superior than any of their competitors. And yes, that includes Microsoft Teams. It still baffles me that you hear football players and other professional players in the NFL talking about how they've been having Zoom meetings when Microsoft is the key sponsor for the NFL. And they're supposed to be using Teams. So, I mean, what kind of volumes does that speak to you as far as the value of the product? So Zoom is going to continue to roll here. If you guys who are in the level 2 crew for the Chaos crew, you saw that I sold out of Zoom. Obviously, it was a little bit too premature, but I was trying to hedge myself on anticipating this pullback, because if we see any kind of Johnson & Johnson news, we'll probably see a pullback from Zoom. But I still think that that's very much in the works. Fat Man Zoom actually brought that up as well for potential dips. But those are really good opportunities. We think that Zoom gets to $600 a share. It is a $600 stock. And so for me, I'm just trying to play a little bit of cat and mouse. Got a little bit too cute this week, but I'm still very much bullish on this thing. We look at the chart right now. It closed at 439, 440 area, and that is actually its resistance, 440. And then if it can break up over that 462, 463 area would be another area of resistance for it. There's pretty much clear skies once it gets up over 440, that sustained move. For supports, where should you make an entry? Well, for me, I'm looking here around 410, 403, 404. So if we see some sort of positive news as far as COVID's concerned, expect Zoom to fall back down. That's where I would end up scooping some more up and then waiting for that boom, because we think that there will probably be a huge move leading up into earnings this week, particularly within the end of the week. Now, keep in mind, obviously, we're closed on Thanksgiving. There's a half a day on Friday, so the stock market will only be open until 1 o'clock. I think those are going to be some good opportunities to maybe scoop up some Zoom on the low volume that we might be seeing in the market. And yeah, I'm just super excited for Monday. I think it's going to be a huge day for them. Anything else you want to comment on?
Nope, no, sorry.
Okay.
Go ahead.
You look like you were going to say something. Sorry.
I know.
So for me, the last one that we have on the list is Square. Now, Square is one that I think is going to continue rolls. Another one that we don't have anything as far as earnings are concerned, but Square and the relationship they have with Bitcoin, I think, is what's going to continue to propel Square moving forward. Not only that, but obviously we've talked about e-commerce already and how impactful that's going to be for this quarter. Square is a huge a benefactor of growth in small business, which we've seen especially on the digital side of things. And then obviously, like I was saying with Bitcoin is now getting ready to approach its all-time highs that we saw back in 2017. Square not only is involved with Bitcoin, but they are directly invested in Bitcoin. They own 4,700 Bitcoins for an average price of roughly $10,600 back in early October. With Bitcoin trading nearly $18,000 today, actually, it went up over $18,000. That $50 million investment is now worth about $85 million. And that's just with them directly investing in Bitcoin. Jack Dorsey, CEO of Square, also CEO of Twitter, is huge in Bitcoin, a huge believer in them. I still don't have everything I need to know as far as Bitcoin's concerned and cryptocurrency in general, but I know that it's valuable to many people. Obviously, we see that it's continuing to grow here. So with Jack being a huge proponent of this, I think this is going to continue to elevate itself leading into the end of the year. I anticipate Square potentially getting by the end of January in the $300 range, and I don't think it's going to even be difficult for them to do that, especially if we start to see Bitcoin getting above those all-time highs that we saw in 2017.
Yeah, well, first thing is, when is Twitter and Square going to have some sort of collaboration? That's
what I've been waiting for, like how it would not be hard, especially now that they have stories and are starting to kind of compete with Instagram in that way. When are they going to, really capitalize on small business in a digital space is what I'm waiting for, man.
Yeah. Okay. So, I'm a PayPal guy. Yeah. I'm starting to come over to Square. I have no issues with Square. I think either one you're great with.
Yeah, absolutely.
But I still lean towards PayPal. However, I will say that, so they announced recently the launch of their kitchen display units. And I broke this down in one of our live streams where essentially, you have a POS system. So when you go into like a restaurant or a carry out, the register, they ring you in. Well, if there's a kitchen, there's usually in the back another connected system which will print out the tickets, or it'll come up on a screen like you see at McDonald's. It's digital. So Square has had POS systems, but they never had something to connect to the back. So they limited themselves and they couldn't really accommodate restaurants.
Right.
Now they can. And I think without actually using it, from just how they explained it and knowing their technology, I think they're going to be a market leader with this type of technology. So it's digital, it's customizable, and these units typically are not. So this is great. So I think this is sort of a reason why somebody would go with Square over other of the competitors. So I really like that. I obviously really like the Bitcoin play. My only challenge with Square is when I compare it to PayPal, PayPal has more revenue, their margins are much better. Fundamentally, they're much better. So Square's younger, so that makes sense, but they need to bridge the gap. They need to work on the margins, profitability, because to me, they're too tight.
Yeah.
However, I think that's the only downside. Everything else I'm really bullish on. And look out for this next year. If you're a long-term holder of Square, you should be extremely ecstatic. I think they launch a credit card next year.
Oh, yeah, that'd be awesome.
And that's what will help them get margins. Kitchen display hardware doesn't get you margins.
Right.
That will get them margins. So they basically want to take over in place of a bank. And if they can start giving loans, if they can start offering credit cards, that's the thing that's going to help those margins and get them where I need them to be. And that will happen. Now, will it happen next year? I'm not sure, but I think it will. And that's going to be huge for the company.
Yeah, I agree. And I've been in and out of Square a couple of times here with the Webull account. And you bring up some really great points, especially on the margin side of things. So I still think that they have a long way to go as far as keeping up with PayPal in that sense. But they are well on their way. You look at something like this. I just ended up getting a starter at $199 with the Webull account in anticipation of this 200 break. Because I think once this breaks over 200 handily, a sustained break over $200, we should see a strong move on Square. And so that's what I'm kind of waiting for. Any kind of pullback on Square, either to the 192 range or even to 183. Those are going to be good opportunities for me to continue to scale in and dollar cost average in on Square, because even from here, I see 30% upside within the next, 6 to 12 months. I think it's just going to be a thing that we really see from Square, and it might even happen earlier than that. And really, I think the part that's weighing the heaviest on this right now, at least in this moment in time, is Bitcoin. So if we start to see Bitcoin continue to break those all-time highs, I think Square starts to get heavily influenced by that as well. To the point that I was saying, as far as, that they are directly invested in this as a company as well. So it just continues to add more to their net income, their net value. So those are.
So
go ahead.
Esperanza had asked, doesn't PayPal have loans too? PayPal has loans, and PayPal just launched a credit card.
Yes.
So that's why I think Square's not too far behind. But yeah, PayPal did just do that. So you're aware.
Yeah, so and I think it's only a matter of time, like you were saying, that Square hops on that same bandwagon. And speaking of Esperanza, aka Hope, she is part of the Chaos Crew, which if you are not part of the Chaos Crew, make sure that you're checking us out. Hit the join button next to subscribe, and what you'll get is a daily watch list from us, and also private live streams, and then access to our Webull account. So if you guys are curious about how we're doing, we're actually outperforming the market right now. 17% to 6% is what the market has yielded this year. So doing really well with that. If you guys want access to that, plus our daily watch list that we put out every single day that are similar to this, but they're just a nice condensed version that we put out before the market opens, make sure you're hitting the join button. The link's also in the description if you can't find it. Just help support the channel. We certainly would appreciate it. And that is the stocks we are watching this coming week. Fat Man Zoom.
If you're thinking about joining, now's the time, because we're doing a giveaway. We're giving away one free Tesla stock. Well, it's not free. It costs us money. But when we hit 1,000 members, which is right around the corner, we're a couple weeks away, we're going to do a raffle. One of our members is going to win a share of Tesla stock. So get in, join. If you're thinking about doing it, now's the time. You might get a free share of Tesla.
That's right. We got about 70 to go. And we will get to that 1,000 member mark, and you guys will get your free stock. So make sure you're hitting that join button. We'd love to have you guys over. And that is going to do it for the Stocks to Watch this week.